Right, hi guys. I'm experimenting with doing sort of a video recap of either the trades I took for the day or wished I'd taken for the day, as perhaps an attempt to improve how I manage and take trades in the future. Now, I'm not a content creator, so my video making skills are even worse than my trading skills, so you may have to bear with me for a little while I get used to this. I'm going to do a quick comment on tools I use to structure the market over and above the TTM trades, which on that system unfortunately doesn't provide us with any way to see the structure in the market. So I've started to add two tools. One is the volume profile, this one which is the anchored volume profile, and then I add a VWAP to that. This volume profile is anchored to the daily open, and I anchor the VWAP to the daily open as well. For me, that's the 2300 candle. Now, this first trade was the Australian dollar, which I know I took and some of the other guys took. Although the Australian dollar had been going down all day, at this point I felt the market was potentially balancing and had the potential to move between the two VWAP deviations. So we had a fair value gap top here, and a reaction here would give us the opportunity to come back down here. So now we had the gap tapped by this horrible doji. However, this did not seem like a very bearish close. So I left this, at which point it gave us this lovely hammer. Now this closed just below the value area high. So, and the VWAP deviation. So I felt that we had the opportunity to come back to at least the daily point of control and this red line here, which is the weekly point of control, and then potentially even as far as the lower first deviation band. So I entered on a slight pullback here with a first take profit at the center here and the second here. As it's played out, the first bar gave us a drop down and a move up, and unfortunately enough volume traded here to pull the point of control right up underneath our trade, which is not great. However, I decided to give it a second bar, and once again we rejected lower prices but continued to print underneath the value area, which had now moved up owing to the volume trade at the top here. As we're still under the value area, I was happy to stay in this trade. We once again reject the value area high, and then we printed a pretty bullish bar, but still staying underneath the value area high. So I felt the premise of the trade was fairly sound still. Printed a bearish bar, again rejecting the value area high. So I decided to stay in this trade. This bar was a dangerous bar. I considered closing the position here. However, we weren't that far from take profit, which of course was a pip and a half above this high. So given that there was a lot more potential reward to the downside than a small amount of risk left, I decided to stay in the trade, even though it had closed over the value area high. This next bar once again rejected the value high and closed underneath. We then dropped a big bearish bar. It was during this bar that I unfortunately break even here, which at the time seemed like a good decision, as we once again rejected lower prices and closed over the point of control. And one of the reasons I wanted to get out of this trade was I felt that the point of control moving up sort of invalidate the premise of trading from value area high down to the point of control. However, this VWAP is still probably a better target. The market then did once again a small bullish bar, still closing underneath the value but continuing to barcode. We then printed another bearish bar, once again rejecting the value area high, and it dropped. Now, this, I think the way I should have played the exit was continue to stay in the trade, provided we stayed we didn't close once again over the value area high. Another close over value area high, I think, should have invalidated this position, and the full take profit should have been done close to VWAP. In reality, this would have just missed the VWAP, but one tends to want to close slightly away from the VWAP, so around the high of this little doji would have been a good place. I should have taken a full profit there, because it was then followed by this massive bullish bars as price rejected the VWAP and potentially began to trend up as we noticed the VWAP starting to move upwards, and the market then proceeded to one further dip and then rise. And that would have been now in a regular TTM trade, this would have stopped us out. But again, when the trades don't run well, I feel active management is better, and in some cases potentially providing a better target than the random 3R in TTM can suit better in the long run. And so I think, yeah, that was that trade in a nutshell. Okay, next, this is an interesting one. Someone did post it in the group in advance, but I missed the entry while dealing with that stupid AU trade. However, it makes a very interesting case study. When let me mark the FEG. Our little FEG set there. Now, when this bar poked in the FEG, it gave a nice reaction and drew this little pin bar. However, as a pure TTM trade, these are pretty bad, because our trade is entering directly into this consolidation. And what tends to happen here is the market goes up, hits a point of control in the consolidation zone, then comes back down to where there's a much better area for the market to bounce, and then proceeds to bounce and go to target. Because trading from here, there is very little actual support for the market to come off of, whereas down here we have a set of lows and a weekly VWAP. Now, I had earlier posted this trade in the group, but I was wanting to short up here as I felt that market had come back into the weekly VWAP and was making its way back to the top, coast to coast as they call it. Then earlier it punched right through the VWAP, so I was hoping for it to come right back. However, when I saw the trade, it was busy in the next bar, and as I was just finishing off and had just done with that AU trade, and I felt I missed it, a quick glance, and I wasn't interested because of this consolidation. However, when we add some context, it showed a fairly different position. If we put our session VWAP on and draw out our volume profile for the session, what we actually see form is the market broke out earlier over the first deviation into what they call price discovery, ramped up, and then returned to bounce off the first standard deviation of the VWAP and the value area high of the day, making this a very nice trend continuation trade to the target, which would hopefully be the upper VWAP. Now, I left this because I hadn't noted this context and I didn't like trading to consolidation. As it played out, it came up, paused on the consolidation, which was concerning, and then moved to this high. As we came up to this high, the high of the day, this is where this trade got really interesting. As it broke through the high, it did this. Now, I posted in the group that someone pointed this out as the result, and my alerts were going bananas over here, and I posted this is likely news. However, I noticed that neither gold nor any of the index futures had budged at all. And I've spent some time studying this, and I think what happened is as this trade punched through the highs, there was just no selling interest at all from the market sellers, and this shot straight through to the upper weekly VWAP. Of interest was also this fair value gap on the side, again potentially indicating that there was very little interest in transacting in this area. Now, if we go through to the future, we'll see this line here is that little high that it broke through. As it came up above that high, you see a lot of volume being traded here. That'll be your stop losses and breakout orders going off. Then the market moves up, and there's a fair amount of heavy volume here. And at this point, you can see all these. Not only do we have not a single market seller hitting the bid, we even have an entire gap here as the market jumped over this place as the sellers pulled their offers. Now there was a fair, slightly thinner volume, some degree of sellers pulling their offers, as we normally have about 100 odd trading on 6E at this point. We had a 37, 92, nothing, and then some volume came back in. So there was clearly no interest at all from the sellers. Now, how repeatable this behavior will be, I don't know, but it's something interesting to watch. If we could find it if a sort of a similar situation comes up, it actually made this a very, very good trade. Very difficult to take as a TTM trade, however, because in light of this, this tends to come back and make a loser. But it made a very interesting case study, and definitely something I'm going to keep watching out for in the future. Okay, then lastly for the day, we had this Bitcoin that I posted in the group marking the two areas. I wasn't interested in the lower one. I was waiting for the upper one to trade. So I had no interest in this. But I thought it was just something interesting to point out. Was the reason I didn't want to take this long was because Bitcoin was very bearish. We were obviously trading below the weekly first deviation VWAP, okay, in price discovery, and on the monthly, and anyone can see Bitcoin has just been dumping this last week. So I wasn't keen on longs in this location at any rate. Now, when the market came down here, I know at least one guy took it, but unfortunately they managed to break even it. First, we printed a number of, I think it was about an hour, it didn't budge at all. That are really the factor I don't like. But what I really noted here is it shows how one of the problems with these TTM trades is the lack of context in the market of the trade. Now, if we look at our target, firstly, seems sort of reasonable. 3R is about the upper VWAP. However, if we look at the structure in the market, we have to punch through. We have this daily point of control. We have the monthly value area low, all in the way of our trade, in order to get to that target. Now, what often happens I find when we trade directly into a daily point of control will often act as a support resistance level, or price will simply consolidate and chop around it for a little bit. Now, what quite often happens is what we see here. Unfortunately, what I discovered, sorry, I meant to say, is I looked at the different brokers on TradingView, and the volume provider to provider seems to vary quite a bit with the Bitcoin. So I'm showing this on my broker, so I can't do replay because the volume on this broker seems to fit price quite well, which might be a concern going forward with Bitcoin, but we'll see. So what happened is price came up into the point of control, punched through it a fair bit. It is Bitcoin, so quite volatile. Rejected hard, broke down below the low, below the value area low of the day, then spiked back up, bounced off value area low, and then continued down. Now, fortunately, in this case, we managed to get to 1.5R, so the guy got lucky and managed to get a break even. Normally, you tend to trade a little bit closer to your daily thing, and you'll get a -1. Because the market often doesn't like, it's often not a good idea to trade into that point of control. And this price action illustrates this quite nicely. If you look, if I looked at this on a lower time frame, you'll see this actually came back and bounced quite nicely. Market then shot back up, bounced off the monthly value area, at which point it would have come back and break even to anyway, and then went to target. So it's just a little illustration of why I don't like to trade into those value areas, into these points of control, because that, unless there's sufficient room for us to gain at least a decent bit of profit, or I suppose in this case a break even. Right? And that's it for the day. Good luck with the trading next week, guys. Let's see what it brings.